And it sounds like you do agree that the 4-year cycle of Bitcoin is a thing of the past.
Absolutely do not agree. We have less than 5% of the people in the world who have any Bitcoin whatsoever. And that's still early in the market. We're on track to do about 3x, in my opinion. I mean, this is looking very much like 2017, the first day of Bitcoin summer. Every time, 4 out of 4 now, it goes off like a rocket ship starting that day. So to me, Bitcoin fall starts the day the bubble pops and ends the day of capitulation. It's the most important season in terms of making money. I think that our all-time high, if it follows what I'm seeing, is going to be.
This episode of Supply Shock is brought to you by Ledn, a proud Bitcoin-only company and the global leader in Bitcoin-backed lending. Need cash but don't want to sell down your Bitcoin stack? Ledn has a trusted track record in providing liquidity. That's Ledn. You'll hear more about them later in this episode. As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research. Quick reminder, nothing said on Supply Shock is a recommendation to buy or sell any investment or product. This podcast is for informational purposes only, and the views expressed by anyone on the show are solely their opinions, not financial advice or necessarily the views of Blockworks. Our hosts, guests, and the Blockworks team may hold positions in the company's funds or projects discussed. Hey everybody, Pete Rizzo, the Bitcoin historian on X, here with another episode of Supply Shock. We're going to go deep into the history of Bitcoin and the internet today with someone who has seen both trends emerge from their earliest stages. I'm talking about Michael Terpin, author of the Bitcoin Supercycle book, topic which we'll debate today a little bit on Michael before we jump in, founder of the Terpin Group, a pioneering PR firm in the 1990s, would go on to apply the same thought process to the social media boom as well in 2007 with Social Radius, and then later in 2013 with BitAngels, one of the first angel investors focusing on Bitcoin and cryptocurrencies. Michael, of course, helping build the cryptocurrency movement, founding a lot of its earliest and still largest startups and protocols. Michael, welcome to the podcast.
Happy to be here, Pete.
Well, let's dive in. The subject for your book, The Bitcoin Supercycle, is something we've been debating with folks on the podcast. We had Matt Hogan of Bitwise on last week declaring that the 4-year cycle is dead. My response was, this is very near and dear to my heart as a Bitcoiner. I've lived by the 4-year cycle. I have kind of planned economically around it, right? Thinking sort of when to kind of and how to plan my financial life. Do you agree, and it sounds like you do agree, that the 4-year cycle of Bitcoin is a thing of the past?
Absolutely do not agree. And
Okay.
I think that when I heard, Matt talk about that, I thought he was selling his book, because obviously if you're a retail investor and you want to go and put your IRA money into a Bitcoin, it sounds very comforting if all of a sudden going forward, there'll be no down years. It's all going to be like, 10% up every year forever. And that's just not how markets work. I mean, we're still pretty nascent in this space. We have less than 5% of the people in the world who have any Bitcoin whatsoever. And that's still early in the market. We went up 100x from the first halving and then dropped 85%. We went up, 30x after the second halving and dropped 83%. This in 2020, we ended up going up 8x. I thought we were going to do 10, but we ended up, because of bad macro, going up 8x, which is still pretty good for an asset class in a little over a year. Gold would have been happy with it. Stocks would have been happy with it. And then we dropped 75%. So I'm projecting that we're going to go about 3x from the halving, 130, 10, 3, this sort of logarithmic diminishing returns. But you don't go from that and all of a sudden go from, 85% loss, 83%, 75, and all of a sudden it goes to zero. It just doesn't happen in markets that way.
I'm glad that you're mentioning this. This is something that I've been trying to put forth, that essentially market cycles are all the same, right? It's psychology. It's just the exuberance of investors, which will naturally be created. And I've used that same data point as well. Maybe not those same numbers, but essentially, I'd say if Bitcoin only declined to 60% from its peak from this market, that would be a huge improvement and a sign that volatility is decreasing, right? So maybe we have to let Bitcoin be Bitcoin and just, be happy with an incremental improvement like that. And maybe that means it goes up to 150, 200,000 and you see a 50, 60% correction. That's just maybe how Bitcoin works at this early stage.
That's pretty much what the data says. And I spent a lot of the last couple of years, and particularly the year that I ended up writing the book, going over the charts, going over the graphs, going into Glassnode and all the other data aggregators, and just really looking for things that I might have missed, or looking to confirm things that I thought were true. And most of it confirmed what I already believed. Once in a while, I had a few surprises, but for the most part, I'd say that the data is getting clearer every cycle. And sure enough, I mean, we're on track to do about 3x. In my opinion, I mean, this is looking very much like 2017. It's not a double bubble year like 2013 or 2020, 21. But I'm projecting that we're going to go up 3x from the halving price, which would be about a 193K, plus or minus macro. So it seems like macro without the super cycle effect, which I'll get to in a minute, is about plus or minus 20. You didn't really have too much of a variation on macro in 2013 or in 2020, but you sure ended up having that in sorry sorry 2013 or 2017, but you sure had it in 2020, 21, because you ended up having this rapid rise in interest rates right when we were looking to maybe approach 100,000. I thought 10x from 8,700 would have put us around 87,000, and a lot of retail would FOMO in to hit 100,000, and then they get wiped out just like they did when they FOMOed in at the 2013 and 2017 peaks. That's just how retail reacts.
So just so I can spit it back and make sure we're tracking. So it sounds like we agree on the 4-year cycle thesis. Your view, 2017, and it was really just propelled by good macro environment. 2021 diminished macro environment. 193 you're projecting for the top because you expect more headwinds from interest rates and things like that going into the end of
So
this year.
I'm projecting 193 as a 0 negative, 0 positive. So in other words, if the positive things of the really the tailwinds that we're getting from better regulation in the U.S., et cetera, are offset by worse regulation and sort of fear of crypto, and obviously China's been that for a while, but the MiCA and the EU now have been sort of negative, but also just the macro economy in terms of the stock market, in terms of every time that Trump uses the word tariff and changes what he said a week earlier, the stock market goes down and crypto goes down. I mean, literally after this last tariff readjustment, we were at fear instead of greed, even with $114,000 Bitcoin, which was sizably up from where it was in April at 75K. We were still at like a 48 fear and greed, which is crazy. And so fear and greed is driven by retail, and it's based on the CNN Money Fear and Greed Index that was for the stock market, and they kind of changed a few things. They looked at items like that I don't think are wholly accurate this cycle, about number of people watching crypto YouTube, crypto Twitter, etc. I think that the new retail this time isn't degens buying Doge. It is 45-year-olds hearing from their financial advisor that they should now be putting 1 or 2% into an ETF. And so they're not then immediately going on to TikTok and watching crypto banter. They're going and just looking up in their Charles Schwab account and saying, should I buy an ETF or should I buy MicroStrategy? They're just looking at different things, and I think that affects the way that fear and greed is calculated a little bit. Retail is coming back, but it's more mature retail.
Yeah, I was going to say, fascinating. So many parts of the crypto economy we take for granted, like the fear and greed index, just a product of assumptions that maybe misinformed. Before we kind of really dig into the cycle specific data, because we're getting a little bit quanty here, I do want to ask. You were early to Bitcoin, 2013, 14, helped build a lot of the industry. What set you down the path of writing this book and digging to the data so seriously? Given obviously that you've been so successful in the space. I like to imagine the OGs that I was interviewing back in the day living on private islands now, building their own, custom castles. So what set you down the path of actually digging into the data?
I was frustrated by the fact that I could not convince other very intelligent investors that I might tell them about some other startup or some other trend, and they would listen to me. But they would, they might look at a mobile startup, but they would not look at Bitcoin. And people who were very smart investors in early stage tech, in real estate, in other commodities. Just I would tell them about Bitcoin, and they just went running for the hills, or they went and asked their broker, and they said, "Oh, it's a scam." And they never asked anybody else. They never read the white paper. They never gave me equal credence to what I was saying to what their stockbroker was saying, who was obviously conflicted because they couldn't sell, Bitcoin back in those days. And and it's funny that I would tell people that when it was. I mean, I literally, and I talk about this in the book. I addressed the New York Angels, over 100 investors that I'd been before, like pitching startups or listening to startup pitches. And I talked to them about Bitcoin when it was $66 in the summer of 2013. And not a single person in the room bought Bitcoin. In fact, at the end of it, I was chastised by someone saying that it was only good for drugs and prostitution, and I should run away from it as soon as I can before I get arrested.
Wow, that's wild. And so, do you notice a big increase in sentiment change amongst that demographic today? Because that's something that really strikes me these days. Is just I remember those days as well, going down to New York Bitcoin Center, and you'd think $100,000 Bitcoin, we must be at mainstream adoption, everybody must be accepting it, but it still feels so early. So, how do you compare Bitcoin to these other kind of cycle trends that you've seen? Obviously, you were in the kind of disruptive age of the internet when startups were really disrupting the status quo. Social media, you were at the sort of nadir of that bursting forth. Are we still early? They call it the hodler's dilemma. Ever wish you could get access to cash without selling down your stack? Well, Ledn makes that possible. Since 2018, Ledn has issued over $9 billion worth of Bitcoin-backed loans, and they haven't lost a single satoshi of client funds in the process. There are no credit checks. You can get funds in under 12 hours and repay whenever you want with zero penalties. Unlike others, Ledn doesn't lend out your collateral. They even publish biannual proof of reserves verified by top auditors in the blockchain. You can learn more at ledn.io. That's ledn.io. As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research.
I've seen this movie before, right? And I think we are still early. Because again, if you figure, I think it's not an if but a when that we hit $1 million. That means that 100 and something thousand, we're only 10% of the way to where I say the first giant benchmark is. I mean, a million is not the end game. A million is not where we're gonna be in 2100. But a million should be where we're at in 8 to 12 years at this rate. And I think that it's just being more and more proven, more and more of the risks are taken out. I mean, in 2013, I didn't have a good answer for the people that said the government's going to shut it down and arrest everybody. I was like, well, a lot of the early investors like Barry Silbert were making a point of getting institutions onboarded to get, the Franklin Templetons of the world, the Dow Jones, to look at it, to look at it as an asset class, to invest just a little bit, because if the banks were maybe the last to come in, because they had credit cards, the industries that they were trying to defend, and they could see the writing on the wall. But there was enough of the financial industry, Wall Street, mainstream, that was big contributors to their campaigns that were involved in Bitcoin, that it wasn't like, yeah, let's all get together and kill this thing. Other than Brad Sherman, almost nobody out there was saying this needs to be made illegal and people need to be punished today.
Yeah, I'll give you my take. So when I try to, steel man sort of the best case for this time is different. So I've spent a lot of time trying to understand where Bitcoin is going. Evolved from a journalist into someone who maybe has more of a historical view on the industry. The Trump election really, to me, feels like a strong demarcator where it's sort of you have the early stage of the industry, and now things are really different in the case that, I'll maybe set up here, my explanation is that, prior to the Trump administration sort of declaring that the, operator of the world's financial system, the most powerful country in the world, would sort of lead Bitcoin adoption, there was a whole number of potentialities that could have happened, right? Maybe in 2021, El Salvador would have established a League of Nations to sort of, establish a new polarity of power within the world. That's off the table. You never had the anarchist revolution with your Amir Takais and your anonymous coders, sort of around the world, right? So it seems like with the Trump election, there was something definitive that happened. And with the government sort of now with the CFTC and SEC most recently coming out and actually establishing programs to advance the industry, you don't think that's enough to offset just some of the raw data points in the 4-year cycle? Because that, to me, that seems like the best argument.
Every cycle has grown. I mean, Satoshi said in the white paper that as long as every 4 years the amount of new users buying Bitcoin exceeds the amount of new coins, which is going to get cut in half every 4 years, the price has to go up. My addition to that is yes, but not in a straight line, and that's where the fear and greed comes in of the segments within each cycle that I call the four seasons. But I would say that Trump happened when he need to happen, right? So in other words, I would say, is it that Trump enabled the next leg up for Bitcoin, or did the next leg up in Bitcoin enable Trump? You have to realize that in the United States, the effect of money in politics is just incredible, right? I mean, I think it can't be underestimated. And the fact that you ended up having, Big Pharma, when they were the biggest contributors to the campaigns, that really enabled, us being one of the few places in the world that doesn't really have, kind of healthcare for all. I mean, most countries have the equivalent of Medicare for like everybody, right? And not these giant parts of your budget that go for insurance, and the fact that people who are just the working poor can't really afford anything. So, to me, the fact that this was the first election that 48% of all donations for the president were from the crypto industry, that was bigger than Wall Street and Big Pharma combined. If it didn't happen this time, it was going to happen soon that we would elect a crypto-friendly president just because of that mandate, money-wise.
So with the Trump this time is different thesis, though, it does sort of break the psychology part of it, right? And that's the part that I struggle with, where where did this bull market start? It does seem like it starts with the ETF in 2024.
I would disagree with that, and I
Oh, really?
talk about this in the book. So there were a number of people who said, "Oh, the cycles are broken because we just hit a new all-time high a month before the halving." And my reaction to that is, you can't have this cycle's new high before the halving. That's last cycle. And so what happened? You had a spike that got us up to 9x from the halving price for the 2020 cycle, because again, that had been tamped down by Biden and Gensler and Elizabeth Warren and the interest rates. So only went up to 8x, where we should have probably gone up to about 10. And so that ended up being this sort of like pent up pressure when the ETF finally, got all of them got approved, that you ended up spiking up to 9x. But if that had been the beginning of the bull market, it would have kept going up fast, because that's what happens every bull market. Instead, it retreated to the halving price of 63 from 73. What it did do was establish a new high watermark for the cycle. So all of a sudden, for the first time, the high watermark for the cycle was not the bubble popping at the end of what I call Bitcoin summer. It was sort of a kind of like fast wick at the end of the cycle, in anticipation of what's next. But it still came back down to what I call the Goldilocks price, the halving. The halving price is always as close as you can get to the perfect price of Bitcoin. It was $12 in 2012. It was $670 in 2016. It was $8,700 in 2020. It was $64,000 in 2024. That is a nice step up every time. Within it, there's wild fluctuations, and that's where I came up with the thesis of the four seasons. Bitcoin spring starts the day of the halving. It's when the seed of the new cycle is planted. That's the shortest season, 4 to 7 months, and it's starting to grow over time. The shortest was the 2012-13 cycle, where it only took about 4 months to hit the all-time high from the crazy $30 high that we went from a tenth of a penny to $30, then crashed down to $1. Having at 12 didn't seem like we'd ever see 30 again. Less than 4 months later, we're at 30. As soon as that happened, that's what I call the first day of Bitcoin summer. Every time, 4 out of 4 now, it goes off like a rocket ship starting that day. And in 2013, it went from $30 to $250. Kind of, you had your first part of the double bubble pop. It went down to 50 and stayed in the sub 100 range for the summer, and then it ended up at 1200 at the end of the year.
What was your 2017 pop moment?
So the pop moment there is when it hit the prior cycle's highs of 1240. So you may recall that once we bubble popped from Mount Gox, and also just the timing of the seasons, it's always the fourth quarter so far in a very narrow range. only 37 days between the earliest we've ever had an all-time high and the latest. 37 days. That's very small. It was the December 4th after the year after the first halving, December 17th, the year after the second halving, November 10th, the year after the third halving. We might expand a little bit. We might be a little earlier than November 10th, but we could also end up being as late as like, mid-December. I think that our all-time high, if it follows what I'm seeing, is going to be between mid-October and mid-December. There's certainly a possibility we could expand into January for the first time, just because I think the pressure cooker has been tamped down because of the tariffs and because of other FUD. Because we could have had a double bubble if there was no tariff situation. We were starting to, gear up just because the optimism over Trump, and then we collapsed to, almost back to the first day of Bitcoin summer when we hit 73,850, and we went down to 75.
Well, so let me give you a slight different version of this, because I've actually used the same sort of 4-season model in my own head, sort of mentally, and I do agree with the kind of winter, spring, summer, fall formats for thinking about the seasonal patterns. I've kind of tweaked this a little bit. Where one of the things that I think that happens is that usually with every Bitcoin cycle, there's sort of a main narrative. There's sort of a narrative about Bitcoin that emerges during that time that's usually kind of distinct. And so my modification is essentially thinking about narrative development. Winter is a time of narrative competition. There's many different people with many different ideas about what sort of the lead narrative should be. Usually in a spring, you get sort of an alignment on a single narrative. Summer, you sort of essentially, this is where it, goes full bloom. Everybody kind of goes in on it. There's kind of a rapid capital investment. Obviously, you reach sort of a high, and then in the fall, there's sort of a disassociation or a falling out of love with that past cycles narrative. So I guess my tweak on it would be, and my question would be, how do you think about narratives? Because it does seem like each Bitcoin cycle, I mean, me and you know this well, has been very distinct. There's almost been like a different culture around Bitcoin, a different way to think about it. Even now, we sort of see this Bitcoin treasuries movement really sort of becoming the cycle's flavor, right? Where it's, how do I know that we're in sort of spring, summer?
There is a new narrative every cycle so far, even more so when you talk about altcoins. The first cycle pretty much was just Bitcoin, and the narrative of altcoins was, Litecoin is silver to Bitcoin's gold, and most of the altcoins were around better forms of mining, fairer mining. I want to be a home miner. I can't do it with Bitcoin anymore, but I can do it with Litecoin. Oh, I can really do it with Feathercoin and Devcoin and Namecoin and merge mining and Dogecoin. And so that was sort of the narrative of sort of the that first cycle. And then when you ended up getting, or rather the first halving, and then when you ended up getting to the second halving, that's when Ethereum kind of came into bloom, and the ICOs, and they talked about, will we have a flippening? Remember the flippening? Because Ethereum was going to be bigger than Bitcoin. It never came within even 50% of it, but the trend was certainly moving in that direction. And then obviously Ethereum had its problems, and Ethereum tends to track that it underperforms Bitcoin all but about 6 months of the cycle, and the last 6 months where it overperforms. And same again. If you figure that we're going to pop around November, if you would have switched from Bitcoin into Ethereum under that thesis around April, and you would have done very well. And it's just that it's a higher risk asset. Bitcoin's the only one that really has almost a 0% chance of ever going under. Ethereum still could. But you end up having a lot of people be very bullish on Ethereum for whatever reason. And again, it's narrative driven. Now it's sort of like, oh, we get interest on Ethereum and we don't in Bitcoin. Last narrative is, oh, we can do NFTs on Bitcoin. It's where I can get yield on DeFi, and I can't do that on Bitcoin. And go back to the last one. It's like, oh, I can do ICOs on Ethereum, and I can't do that easily on Bitcoin. And so that's really where the altcoin narrative comes in. And I think it's a different narrative than the Bitcoin narrative, but I would agree that there's a new narrative. But I think these cycles overlay, and I think they are price driven. So again, easy to determine the first day of Bitcoin spring is the day of the halving. It's when you go in one day from the miners being profitable to being unprofitable. And you would think that the price would drop, but the history of Bitcoin spring is that it stays flat, because when the price drops because a miner capitulates or starts selling some Bitcoin, there are other people looking to scoop it up because they know where the cycle is going to go. But they don't go all in until they see sort of the bull market really take off. And that happens the first day that you get, and again, it's been 4 out of 4 now to the day. So I really believe in Bitcoin summer being the day that you hit the new all-time high. And that's easy to tell too. You just look at the chart, and again, the controversy this time was the all-time high going to be determined from the 21 price or from the 24 price? And I was right. You didn't get a parabolic run up until you hit 73,850. That became the new all-time high. You hit that 67 price a couple of times during the April to November timeframe. In the book, which I finished writing at the start of August, and it was published in November, I said, if Trump wins, we'll have better macro and we will hit the new all-time high in early November. If Kamala wins, we'll still hit it during the year, but it'll probably be end of December. And can't tell what happened with Kamala, but certainly I was right on Trump.
Let's take a quick break to talk about today's sponsor, Ledn, the most trusted name in Bitcoin-backed lending. Look, if you're like me, you never really want to think about selling your Bitcoin. Ledn has a solution. You can borrow against your Bitcoin. No credit checks, no monthly payments, no hidden fees. You can get your cash in under 12 hours and pay back when you want with zero penalties. Unlike other platforms, Ledn has a history of transparency. They prove it with independent proof of reserves audits every 6 months on the blockchain. In total, they've issued more than $9 billion in loans without losing a single satoshi of client funds. That's the kind of track record you want when it comes to securing your Bitcoin. You can learn more. Visit ledn.io. That's ledn.io. As always, investments in blockchain technology involve risk. Terms and conditions may apply. Do your own research. Yeah, I would have predicted an all-time high in either case, though that was a bit controversial. I do have a question about your view on the technology narratives, right? Because I do sort of in my memory sort of associate you very strongly with the 2013 to 17 era. BitAngels was doing so much to kind of fund a lot of the alternative protocol development around Bitcoin, and of course the big narrative back then was really, I think, and this was pushed by a lot of Silicon Valley types, that Bitcoin was being outmoded and sort of replaced by kind of these like new technologies like Ethereum that have more capabilities. That was sort of the big in vogue narrative. Obviously, nothing wrong with exploration and some trying some different things. But I guess what's your read on that era now and what it's accomplished? Because it does seem like
I was never an ETH maxi, even though I helped launch it with Vitalik doing a lot of their marketing, the PR for it when we launched at CES and then at the Bitcoin North American Bitcoin show. It was an exciting new narrative, and we got attention from a lot of the media. Wired wrote a nice big piece on Vitalik's vision of a world computer and all that. And I think that I've never had a period where I had more altcoins than Bitcoin. I mean, Bitcoin has always been my store of value. It's always been what created the industry. It's the mothership. I'm not a Bitcoin maxi. I call myself a Bitcoin preferentialist. I don't judge my wealth in altcoins, and I don't judge it in fiat. I judge it in Bitcoin. However,
so what do you think that side of the industry is sort of aspiring to at this point, I guess is my question, right? Especially with Ethereum seems to be kind of in a bit of at least in the technical community, there's a lot of malaise, right? And I think that it's fair to ask the question of sort of, where is that side of the space kind of going at this point?
There's a lot of new excitement in Ethereum. I mean, it's funny, like right before, I mean, literally within a day or two of I remember Rand Nunware, saying, well, I'm basically saying, Ethereum is gone. They're the past. Solana's the future, blah, blah, blah. It's been at 1,500 forever. It's going to be 1,500 forever. And literally all these people were like shorting Ethereum. And then you had a short squeeze, and then it went up to 1,800 and just kept on sailing up from there, because there are a lot of ETH whales who believe in ETH, and they want to kind of, if Bitcoiners are manipulating the price at times, then so are ETH whales. And I think that a lot of the struggles that you have, I mean, look, the Bitcoin Foundation certainly had its share of struggles before it kind of broke up, and there's always things between the miners and the devs. And so, we shouldn't expect perfect peace and harmony between, Vitalik and the rest of the community and the devs, et cetera. I think that they've made some improvements in the last few months. I mean, I don't track it closely, but I've seen reports that they've kind of got a lot of the academics out of there and a little bit more builders in. Obviously, them now kind of, looking at some other innovation going forward to scale. That's always what they were looking to do. Nobody believed for periods of time that they could ever pull off L2s. Obviously they did. They didn't think that they could pull off, Now they're going to be going away from EVM and into this next.
Yeah, but the idea that Bitcoin is still 60, like 50 to 60% of the market, like had you told somebody that in 2017, that 10 years later Bitcoin would be
I thought Bitcoin would always be bigger than the alts. I always did.
okay,
I did
interesting.
not. I may have been in the minority. I just look at alts and other layer one protocols as the innovators versus the store of value, right? In other words, I mean the saying, I forget who first said it, that Bitcoin is digital gold and Ethereum is digital oil. There's a lot of cool things that I don't go of the utter maxi position that everybody developing anything other than Bitcoin's a criminal and should be put in jail. I think that you have very innovative startups with ideas. Most fail, just like most Silicon Valley startups failed, and some have succeeded wildly. You can't say that Ethereum has not succeeded wildly from the days when it did an $18 million valuation token sale. That was just 10 years ago that they launched.
But how much of that thing I struggle with is like how much of that infrastructure are you using, right? So I've gone through my phases with Ethereum. I think early on I was very interested in seeing how it would play out. Obviously as I became more of a Bitcoiner, I think I fell out of love with Ethereum. But I think at this point it's like I have to ask sort of I'm not using these other kind of things that have come out of that system. Like I don't use Solana, I don't use Ethereum. I don't really have like a reason for and I work in the industry, right? I've been working in the industry for like
Well, I mean,
10
because
to 12.
again, I am not a hodler. I am a person who wants to have more Bitcoin at the end of the day. And I think the way to do it is sell at the top and buy back at the bottom. And so it's hold Bitcoin for 3 years, hold cash for one. I'd rather hold the cash in stable coins, which requires something like Ethereum.
Yeah, stablecoins I'd say would be the one thing where it's like, I've sent a wire transfer versus a stablecoin payment and it makes intuitive sense. But even then, it's sort of such a short term exchange, right? And so the question I guess I'd have with the altcoin system is like, one, it does seem like we're going to see the institutions compete to offer some type of rails. I'm not really sure why the institutions, would build on the public public crypto infrastructure. And then where does value accrue in that system,
Yeah,
right? I think that
I think that the writing's on the wall that you know big banking is done fighting and now wants to just simply join in the point that they think they can probably take it over. Um, you look at stable coins. JP Morgan is going to do a stable coin. Arthur Hayes wrote a really nice blog piece a couple of weeks ago where he basically said, I'm bullish on Bitcoin and I'm bullish on the big eight banks and the big two big to fail banks because they will take over the stablecoin industry. Right now, you have a law that for Apple and Facebook and Amazon to go and offer their own stablecoin, they have to partner with a bank or a fintech. They can't do it on their own. And so, they'll probably go and say, all right, I can't partner with Tether. I can't partner with USDC, but I can partner with, to make my own with JP Morgan, or well, I guess maybe USDC maybe consider a fintech. I'm not sure where they fall on that, and they do have some banking backing. But I think in the future, particularly in the global South, everyone will start having, instead of no bank account, they will have two bank accounts. They'll have a stable coin wallet as their checking account, and they'll have Bitcoin as their savings account if they're smart. And you'll be able to move back and forth between them. You'll go and be encouraged to save. Perhaps some people will follow my model and sell some at the top and buy more at the bottom and have their stable coin in between.
Well, my question is like, how Bitcoin and crypto native are you at this point, right? So me and you have both been in the industry, I think, for 11, 12 years. You're a little bit preceding me. Like, how much of your financial activity is actually taking place on these protocols? Would you say at this point?
Like 90%. I mean, I don't deal with banks unless I have to.
So you're dog fooding and just completely kind of a user of everything at this point.
Yeah, I mean, why not? I mean, what kind of interest can I get through JP Morgan Private Bank? And I use them, but they pay me 0 point something interest. And whereas I'm getting much better interest on stables. And then and I'm right now in the time of the cycle where I'm holding on mainly to Bitcoin, right? Because it's gonna, by my opinion, still have another 50 to 100% between now and the end of the year. At which point, then, I dollar cost average out. I won't get rid of 100%, but I'll certainly get rid of more than half if the signals say to do so.
So your plan is to kind of do a strategic exit and then a cycle back in, kind of at the end
Correct.
of it.
Correct. Because every time I didn't, I regretted it.
Interesting. That's an interesting perspective, even though it's gone up so much as
Well, because I could
in
have had twice as much. The one time that I actually did do it was a panic, and it wasn't at the top of the market. It was when Craig Wright said, "I'm going to kill Bitcoin," and I could see that it was going to really drop quite a bit from there, and it did. And I literally sold like 2/3 or 3/4 of my Bitcoin just to get it out before it dropped. And I think I sold it around maybe like 5,000 and bought it back in around a little under 4,000. And, that ended up, meaning that ended up meaning that I ended up like getting quite a bit of cash and kept all the Bitcoin and actually bought a little bit more. But I can do a lot better if I do it at the top of the cycle, not at the bottom panic before capitulation.
well, this was Matt Hogan's. I asked him to defend his 4-year cycle is dead thesis, and he said, my big worry is that the old time, the OGs, they try to exit out the top this time to buy back in later as they have before, but Bitcoin just keeps marching upward, and the adoption just continues because of the institutional interest. It can offset sort of some of these price dynamics.
Yeah, don't tell me that institutions don't want to buy low. I mean, a lot of them are involved in shorting. A lot of them are involved in FUD, and they will take advantage of the FUD and the media. Basically are lapdogs to whatever the easy narrative is. Right? They're happy. Just months after saying Bitcoin, how high can it go? How crazy is this? It's like, $60,000 to like, oh, Bitcoin, what were we thinking? How do we ever get sucked into this thing? It's now 15,000 and going to zero, right? And it's just an easy, like no research, just like, yellow journalism, mainstream more than crypto,
Yeah.
headlines that they just love to repeat because, it sells newspapers, as they say.
Yeah, that's been one of the more depressing things as someone who, was part of the early crypto journalism effort to see that the mainstream journalism companies never really became good stewards or contributors to, the industry in any way. I mean, I remember a conversation with the New York Times people a couple years back, and I said, why can't you dedicate a few people to actually understanding this industry? Like it's so large at this point, and I don't know. It just seems like every cycle they assign some new folks, and
Yep.
they put the young kids on it.
Well,
And it just,
Nathaniel Popper understood it and wrote a nice book about it, but then he kind of like, isn't really the guy anymore. So there was a few people that sort of understood it, but you know what? It didn't stop them from writing very negative articles because a lot of times they had to write stuff that was around the narrative of the newspaper. And, the New York Times has a certain point of view.
So what does Bitcoin need to do, I guess, to get to the point where, you saw with the social and the internet, obviously, you had successful startups in each era. Like where does it need to, or how do we know when it gets to that point? Where does it need to get to? Like, how does it get over that chasm? Because it still seems like, is it stablecoin? That
Yeah,
would
no,
make
no,
people.
no. Chasm is a really good word because I talk a lot in my talks, and I mention it in the book about crossing the chasm. Jeffrey Moore. There's a number of other things that are similar to describe what's been called the S curve of adoption, and also the Gartner hype cycle. I mean, they're all variations on a theme, and basically what it is that almost every new technology goes through a period of time when it's the early crazy people that see the future and they're not worried about the present, right? So if you look at the early internet, I remember someone from NBC telling me NBC network television will never be on the internet. My mom is not going to go and put a second phone line in and be woken up in the middle of the night by something going and besides, it's like you can't get video on it. It takes forever to even like, my fax is faster. They didn't see the future. They saw the present. And the future is, 25 years later, you go and you say, hey, mom, here's an iPad. Press on and watch Netflix, right? And, so you have to see what can the technology enable? And if it enables it, will it appeal to everybody with very little friction? And that's what, if you could really be a visionary of the internet and what it could do, social media and what it could do, Bitcoin and crypto around it, but Bitcoin powers it all, and what it could do. That's when you see that it's unstoppable. I mean, I think it's as unstoppable as the internet and social media. And right now we're only 5% of the world has any Bitcoin. A little bit more if you include altcoins, but about 5% is the highest I've seen in terms of Bitcoin wallets, having even $1 in there, even through exchanges. And so 5%, when you have 95% of the Bitcoin out, distributed, mined, that's when the S curve is really going to have some impact. Because when you had the S curve take off in automobiles, airplane travel, mobile phones, the internet, there's a classic photo of I think the years were 1903 and 1913 of Times Square. 1903, it's all horses and one little experimental car. 1913, it's all cars. And I don't know that Bitcoin is going to change as fast as the car did or as color TVs did. I remember when those came in when I was a little kid. All of a sudden, you went from everybody having black and white to everybody having color in about a year or so, it seemed. It was like keep up with the Joneses. And, that's the tipping point. That's when you end up going from the early, and Jeffrey Moore, I think is the one who speaks about this most eloquently when, there is this chasm because the 3 to 5% of early adopters want different things than the early mainstream. If you ask the early adopters, guys like you and me, what do you want in terms of like where Bitcoin should be? You're like less regulation, and the early mainstream will say more regulation. There's little different things they wanted. I would say more functionality. They'd say easy to use. Explain it like I'm five, and at some point you end up having the GUI interface, the improvement in feeds and speeds effectively that happened in the internet when we ended up going from dial up to broadband, and then mobile broadband. It happened in mobile phones. We went from the bricks to the flip phones to the iPhone. And once it happens, then all of a sudden it's like you're behind it. The FOMO comes when you're at the end of the early mainstream and you go into the mid mainstream. That's when you go. The early adopters get you to around 5%. The early mainstream maybe gets you to 15%. The mid mainstream gets you over 50%. And that happens fast. That's when all of a sudden you feel like you're left behind because you have an AOL account, because you don't have an iPhone, because you don't have Bitcoin. And, and I think the layer upon it with the fear and greed cycles is typically people become most aware of Bitcoin during Bitcoin summer. That's always the year after the halving. They're not going to go and FOMO in when the price is dropping every day. And probably not after it capitulates. So to me, Bitcoin fall starts the day the bubble pops and ends the day of capitulation. It's the most important season in terms of making money because you have to realize when it pops. It's really easy to figure out the first day of Bitcoin spring. It's on the calendar. It's the halving date, right? And it's easy to figure out the first day of Bitcoin summer. It's the day you pass the all-time high. That's just math. It's tougher to figure out when you've actually hit the all-time high because a lot of people thought the all-time high was 250 in 2013. It went way higher than that. And so you have to look at a lot of other indicators to see if you've really hit the all-time high and you start dollar cost averaging out and you're not, missing a moon bag that would go 3x higher. Same thing in capitulation. And one thing to look at is the whales. On chain, you can see, and again, most of the older whales do not sell every cycle. The majority of them are just like buy and hold and never sold. But the ones that do sell, that 15 or 20% of them, they're pretty. They move as a pack. They tend to move and buy or sell rather about 4 to 6 weeks before the actual top because they're like, good enough for me. I'm going to go and sell some and then buy it back at the bottom and pay for 4 years of living expenses and have the same amount of Bitcoin or maybe more. And they tend to, surprisingly, not buy back in until about 4 or 6 weeks after the bottom because they think it's going to go even lower. You remember when we hit 15, there were people going like, hey, I got my buy orders at 5K, and to me, it became obvious that the bottom had been hit and was not going to go any lower when we had the Genesis lending bankruptcy, because that was just as bad news as Terra Luna and Celsius and FTX, but the price didn't move. Why? There were no sellers left. If you didn't sell after Terra Luna, you didn't sell after Celsius, and you didn't sell after FTX, you were not selling. You were holding on. And with no sellers left, it can't go lower.
Interesting. As someone who, has been saving my life's worth in Bitcoin for a while now, I think, I'm still in the mindset of, I'm probably too risk averse to engage in that. But it sounds like you think that this is something that could be replicated and that people could replicate.
Yeah, that's what I read about my book, and I have a new fund that's coming out, and the next couple of weeks we'll be launching it to, it's called the Bitcoin Supercycle Fund. And, it's going to be looking at $21 million to raise, and I'm putting $1 million in of my own money. And, partnered with a really talented algorithmic programming group that I invested in 6 years ago, and they wanted to go and make a fund, and I said, I'll do it with you, but only if it's Bitcoin, because that's the one that's the lowest risk and highest reward, because the altcoins don't have the halving cycle, and they don't come back after the crash.
So what is the super cycle then? If you love the 4 year cycles, to you, what is the super
To me,
cycle?
the super cycle is when, and I talk about in the book commodity super cycles. There have been 3 of them in the last 100 years. One was when gold 4x'd over the decade of the 70s, and that was because you had a change in the narrative that fundamentally impacts the price in a positive manner. That's, to me, the definition of a super cycle. And this goes back to Elliott wave in the 30s, etc. He talked about grand super cycles that lasted centuries, and he had cycles all the way down to 10-minute cycles on things. But he talked about a super cycle, and the super cycle, again, between Elliott and some other theorists before you even get to Bitcoin, in a commodity sense, it was basically when the fundamental narrative changes because of something. Something's different. It's changed. It's added value for a period of time. And usually, it's got to be at least 4 or 5 years, not like a couple months. And so, what happened in the 70s was you had 2 things. You had the U.S. going off the gold standard, and you had gold being re-legalized for Americans to buy it. So all of a sudden, you had new buyers, and you also had a reason to buy because you could see where fiat was going to go when there was no gold backing it. That was the 70s. The next super cycle was in the 90s, and that wasn't just gold. That was across broad commodities because of China. China was consuming massive amounts of copper, nickel, lithium, you name it, and commodity prices all rose during the 90s. And we're at the start of a new super cycle, according to the one of the commodities groups. I quote them in the book. Basically, I think it was the CA that said, we're now at the potential beginning of a 3rd super cycle for this last 100 years that's based on, debt, and how much can you debase, a trust me, bro currency? Is it, can you go, 100% of the GDP? Can you go 200%? Japan's already gone higher than that, and it's not helping their economy any. And even as the reserve currency, can you go to where the majority of your GDP goes to paying off interest? And so at some point, it breaks. And the history of fiat has been that when it breaks, it's like what Ernest Hemingway said about bankruptcy: slowly then suddenly. And that could happen with the U.S. dollar, and certainly it's happened with other currencies where all of a sudden you have a world of hurt, and then all of a sudden you have just hyperinflation. And people think hyperinflation can't happen here, but it's happened all throughout Europe in the past 100 years, and so it certainly could.
So the last question I guess I would have is, if it's not the super cycle this cycle, when is the super cycle going to be then? How much longer are you going to?
It's basically when and let me be clear on this. It's when the diminishing returns that you have because of higher numbers, right? So 100x isn't going to stay that way forever. You're never going to have another 100x in one cycle, just law of large numbers. But when you were diminishing the returns of 100x and then 30x and then 8x and then 3x, you keep on going down there. The next, there's 33 cycles. We're only in 5. By the time you get to the 10th or 12th cycle, then you would be getting at these little tiny numbers of
Oh, so you're looking at the whole halving curve, actually.
the whole halving curve, yes. And the thing is that I believe that you're going to have a disruption in the continual decline that is based on the decline meets the S curve, right? So in other words, if you only have 5% of the population having any Bitcoin, but you have 95% mined, what happens when we triple the amount of people having Bitcoin? Where does it come from? When the internet tripled the amount of people they had from 5 to 15%, Microsoft and Cisco got rich. They made more money selling software, selling servers, selling the things that they needed, but they had an unlimited capacity to do that. The Bitcoin miners can't say we're going to triple the amount of Bitcoin that we're going to get out there. It's fixed. It's 450 a day and then 225. So it has to come from existing holders. The people who get rich are the ones who've been hodling, and they just have to pick their number. They have to say, do I want to sell it at $1 million? Do I want to sell it at 10 million? And if nobody sells at $1 million, it's got a pressure cooker. And particularly during Bitcoin summer, when you have the highest degree of people wanting in, that's when you have price discovery. Price discovery happens when you pass an all-time high. You pass the all-time high in Bitcoin summer, and then you pass. The bubble pops, and all the skeptics come out, and that's when you can buy back in cheaply. And that seems to be repeating. I see that repeating at least for the next 20 years. But I think we'll have the super cycle when we basically, if we in one 4-year period are on track to double the amount of users, to go from 5 to 10%, the pressure cooker's got to pop. It could do it this time. It'll certainly do it by the next 4-year cycle. And I think that, we will tell by the price at the end of this cycle. If we go and exceed 240, which is about 20% above normal positive macro, and we end up popping, even if it's for a day or two, to 300, 350, 400, these are all possible, then we've begun the super cycle. But that doesn't mean that it's never going to go down. In fact, I think that whatever price it gets to, we're going to drop by about 2/3. If we go up to only 150, we'll go down to 50. If we go up to 450, we'll drop to 150. And that just seems to be the way that the fear and greed of the 4 cycles, happen. You go from the maximum greed the first day of Bitcoin fall, and the maximum fear the last day. And if you look at a chart, it's fascinating. The only times that we ever got below 10 on the fear and greed were right at the bottom of the cycle every single time.
Fascinating stuff, Michael. We hope to see the super cycle with you someday, whenever that comes to pass. Where can people learn more about what you're doing on the fund side and all the stuff you got going on?
You can buy the book on Amazon. It's in select bookstores too, distributed by Simon & Schuster, but just Amazon. You just go and look up Bitcoin Supercycle Michael Terpin, Terpin. And the fund has not launched yet, but it will in the next few weeks, and it's for credit investors only. And the site is bitcoinsupercycle.fund. And I'm excited about where we're going in the cycle, and looking to prove my thesis and get people more returns than just sitting in their wallet and hodling.
Amazing stuff. Of course, speaking of where we're going, we'll be headed to the UK, London, for Digital Assets Summit later this year in October. You can go to blockworks.co/events to learn more about everything going on there. Of course, speaker announcements and much more to come as we get into the thick of this bull market cycle. Whether we're going up and down remains to be seen. Michael, appreciate you coming on the podcast. For now, this has been Supply Shock, a Blockworks podcast.
Thanks so much, Pete.